I like to think of like when you have token and equity now as Schrodinger's cash flows, where everyone believes the cash flows are going to both the token and the equity at the same time. But I think over time, again, with like efficient markets, like the market's going to figure out whether the token has any actual value or not.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
Hey guys, welcome back to 0x Research. Today we have some relative OGs from the Blockworks Research team on today, or I guess across research data and advisory now. We've got Westy, our relatively frequent favorite, Dan Smith, and then David Effort Capital on with us today. I guess before we get into things, I do want to do another quick highlight for DAS. It's coming next month. It'll be in New York. There'll be a ton of great speakers there. There'll be some live podcasts. Folks from the research and various Blockworks teams will be there. I know a couple of you guys will be there. I'm curious, maybe if you want to do a quick shout out, like if there's one thing you're super excited about for DAS.
Yeah, I'm pretty pumped to meet James Kristoff, longtime passion member of the pod. I'm not sure if he claims to work at a bank, but I'm not believing it because he's in that Telegram chat just as often as me. So I'm just not buying it. No, I'm also giving a talk on RAV, a fundamental truth of crypto. So that'll be fun as well. And I guess while we're doing the Blockworks shows here, we're hiring across a lot of different functions across not only Blockworks Research, but also the broader Blockworks company. If you Google careers at Blockworks, it'll take you to an Ashby link. And we're hiring across sales, engineering, content and podcasts, as well as research. So looking for some protocol analysts over on David's team with the advisory offering, as well as some research analysts to build investor-focused content. So be sure to check that out. If you think you're a good fit for that, reach out to any of us on this pod. Twitter is probably your best bet there, but Telegram as well, and definitely apply.
Awesome. And to maybe close out the shill on DAS, we have a code 0x10. If you want to make a trip out to New York, meet some folks from Blockworks, meet some folks from the industry, get 10% off your tickets, 0x10 at the link in the show notes. Check it out. Hopefully we'll see you next month. Let's jump into some topics for today. I think the markets have been a little bit of, it's so over, we're so back, it's so over again today. The big sort of news on the timeline right now is the ByBit hack. Something like 1.4 billion plus worth of ETH from their cold wallet was confirmed to be basically transferred to some exploiter's wallet on chain and then split up among various addresses, whatever they're going to do to try to either capitalize on that or offboard it somehow. Maybe that's possible, maybe it's not. Curious on any high level takeaways. I know there's kind of questions percolating around, like, are we screwed? Are the markets exploding? Is this FTX 2.0? What's up with Athena? Any thoughts, guys?
Yeah, it's definitely interesting to see a hack of this size. It's been a while at least it feels like it's been a while since we had one of these major exploits. DeFi Llama does a great job of tracking some of the largest exploits. Maybe I'll pull that up here in a second, but this one kind of is interesting. So it seems like there was a Gnosis safe that ByBit used to control one of its cold wallets. This had, again, about $1.4 billion of ETH in it. And the team put out a tweet that basically stated something to the effect of the addresses that we were looking at appeared to be the right addresses. But then after they signed the transaction, it became very clear that was not the right address. So the point being here is their actual devices were likely compromised. Again, this happened within the hour. So a lot of news will change in the next couple hours and likely before this pod gets out. But that's the information we kind of have right now. It seems like the exploiter basically funneled the funds out of the ByBit cold wallet into the first wallet, and then is now dispersing them across 10K ETH clips into a series of other wallets. So it does look like a pretty sophisticated hack. In the past, we've seen similar things where the same type of occurrence will happen. You'll see this major outflow from an exploited wallet, and then you'll see more, let's call it atypical behavior where you'll see them farming in DeFi applications, right? Like there was the famous one that the funds went into the Curve 3 pool, or there was another one. It was actually the Jump wormhole exploit for the wrapped ETH on Solana that ended up coming back to Ethereum, and they were farming with that in now I'm totally blanking on that, Oasis, which was like the MakerDAO crypto lending tool at the time. And that actually ended up getting counter exploited, and they took the funds back from Oasis, right? And that's like exactly why when you see these like very large scale professional exploit shops, you never see them farming with it, because it's very possible to lose those funds again. And that's not the intent of why they exploited it in the first place. Versus if it was like a more casual, cracked smart contract dev who went black hat on us, that's when you'll see kind of this like degenning or farming with the funds, because there's really nothing you can do with it at that point. Because it's very hard to offboard size in especially stolen funds. So yeah, it's pretty interesting. I think my big takeaway from this is ByBit will probably be fine. They make a shit ton of money. It's a massive exchange. They probably do more than $1.4 billion in revenue a year. They'll be able to repair this hole, is my gut feel. Of course, again, this happened an hour ago, so it's pretty early to tell, but that's kind of my initial reaction. And then secondly, big props to Athena's off-exchange custody solution, right? That was like how their product was meaningfully different from other products that we've seen that are doing this delta neutral strategy in the past. And they're using Copper Clear Loop for this. Excuse me. And if they already came out and said, hey, our custody solution prevented us from having an impact to our custody in this, and like, that this is why we built the system the way we built the system. So it's actually really cool to see. It feels like a big prove it moment for the tech behind Athena, which again, I think is like the 5th largest crypto protocol by TVL these days. And it feels like a big win for them. Now they still have like, I don't know, probably somewhere in the order of like $1 billion of perps notional open on ByBit. And again, I think ByBit will be totally fine, but it kind of sprung the question like, okay, imagine that they weren't fine and they had to basically go bankrupt and shut down. I feel like I don't know what that looks like to unwind the perps positions or all the other spot positions, but my base case is just not an orderly unwind. And so that was kind of something interesting. It's like, all right, if it were to go south, what does that actually look like? And I guess that's kind of a good credence for why, you want to be on the biggest and best exchanges, because they can repair these holes.
Yeah, interestingly enough, I saw the Athena Twitter account tweet out actually probably 15, 20 minutes ago. So they had their collateral assets from the customer deposits they don't reside on the exchange. They reside with Copper or Cefu, which I think was last year rebranded from Binance Custody. And they, do off exchange settlement between the custody of Athena and the centralized exchange. But the P&L of those delta neutral positions are on the exchange. So it was $30 million at the time of the attack of unrealized P&L. Athena just confirmed that they have reduced that to 10 million, and within the next hour, it's going to be 0. So effectively, Athena will have nothing at risk on ByBit. And God forbid, even if all $30 million of unrealized P&L was stolen, which is not the case, Athena is sitting on, I believe, about $70-ish million in their reserve fund, which is specifically for these types of events. God forbid, a black swan event, they can cover the funds that are potentially stolen. So Athena is actually over collateralized in a really healthy position. Yeah, kudos to that. Every single time there's a black swan event or market-wide nuke or something like this, they continue to show that they have like really anti-fragile infrastructure and are becoming lendier and lendier by the day. So really bullish them.
Yeah. Okay. So I just pulled up that DeFi Llama dashboard that I was talking about. I'll go ahead and share a screen here as well. But one thing I was not expecting to see is this is actually the largest exploit by size of all time. The last one was Ronin in 2022, March of 2022, for 600 million. So this is more than double the previous all-time high in terms of the total amount lost, right? Because this was 1.4 billion. Now, we don't know if those funds will be recovered, and candidly, I don't know how recoveries impact the numbers displayed on this dashboard. But that does feel pretty meaningful, right? Like, ooh. But to my earlier point, yeah, it feels like it hasn't been a while, because it hasn't been a while. The top 5 largest exploits all happened in 2021 or 2022, with the 6th largest being DMM Bitcoin for 305 million back in May of 2024. So not even a year ago. I actually don't remember that at all, to be completely honest. But it looks like some Bitcoin custody solution.
Even though we don't have full information on exactly like what the actual attack vector was. We do have some information from Ben from ByBit, and we were talking about this morning on like the analyst call. And Danny, I think you hit it right on the head. It's pretty scary how they were actually to be able to actually pull off this kind of attack. It sounds like the individual hardware wallets, who were the signers of the warm wallet or the eventual cold wallet that was hacked, their hardware wallets were hacked. So they were able to infiltrate potentially the entire ByBit like employee population. You never know at this point. Like you misclick a link, you download you think the Zoom link, and it ends up not being one. And you connect your hardware wallet to a non-air gap device, and they're North Korea hackers or whoever these actual hackers are. They're just waiting for everyone to slip up at the exact same time. This was very similar, and Danny, I know we couldn't remember the protocol at the time, but I think Jacob from the data team brought it up in the chat earlier today. This is almost the exact same type of hack as it seems from Radiant a few months back.
Yeah. And sticking on with the DeFi Llama shout outs here, their sex transparency dashboard is pretty sweet in times like these. So ByBit still has $15.26 billion of assets, and they've seen about a $1.7 billion of 24-hour outflow, again, with the hack being about 1.4 billion of that. So they still have withdrawals enabled, again, as David alluded to earlier, with Athena being able to pull off another 20 million from the exchange. So it looks like we've seen roughly about $200 million of additional inflows and users just reacting to the fact that this exchange was exploited.
It was interesting to see the reaction on socials. You had a lot of people, especially, with money in ByBit, having sort of like FTX PTSD, where as soon as they saw an exploit, they just rushed to withdraw. And like when they just saw like pending in their inbox, they assumed, oh, like the stuff is like fucked, like our money is stuck. But it seems like withdrawals are being processed pretty quickly. And the other interesting reaction that I thought was funny was like, oh, this has got to be bullish ETH, because now they need to buy back $1.4 billion in ETH in order to make themselves whole. So I thought that was super funny as well.
Anything for an ETH bull catalyst. Also, a huge shout out to the ByBit team. They were very vocal on their comms throughout this whole process, which is pretty cool to see. It's very easy to go like dark mode on this and just be like, oh, we're solving the problem, and forget to communicate to the world. But especially when these can create these like, bank run-esque situations, it's very important to be communicative and vocal and loud and let people know what's happening and display confidence. And I think they did a great job of doing that. The other piece on like the pending withdrawals point. So the infrastructure about like how these withdrawals get processed is actually fascinating. I mentioned earlier there's about $15.2 billion on exchange. They have to physically store that somewhere. Well, digitally store that somewhere across different chains. And so when you have, let's say, $1 billion on a random chain, let's say Arbitrum, and then I had funds on Arbitrum, so let's say I panicked and I wanted to withdraw them from ByBit, I go and do that, and then when Westy tries to do that, and if all the funds are gone, but he has funds that he's trying to withdraw from Arbitrum, on the exchange backend, they have to move funds between hot and cold wallets. They have to actually bridge these funds themselves and then get them back onto Arbitrum before they can process those pending withdrawals. So it actually is pretty interesting to kind of see the back end of how all of these things work, right? And if you like go look at any ByBit hot wallets or even cold wallets, like they're super active right now, again, because they're just having to balance their funds based on where the user demand is coming from to withdraw to those chains.
100%. And a great call out, I think, David, on the sort of Radiant hack similarity. This, whatever this like trend in, if it's social engineering or if it's just phishing to gain access to like, critical parties within organizations, that seems, we're just getting to the sort of Web 2 level of hacking now, where a lot of the easy smart contract stuff has been kind of cleared up for the most part. You're not going to get 1 billion for free for like bugging a smart contract anymore, at least, generally speaking. And now it's gotten to the social engineering and phishing and other typical forms of hacks that we see, where if you can gain access to like the key individuals in the multi-sig, then that's how you're going to get access to funds like this. So it really speaks to like having to be vigilant about this type of stuff. And I'm sure ByBit and others will probably be reviewing like their internal security processes following this event.
One thing that I know we're talking about ByBit, and I did say this like tongue in cheek in the chat, and I said it on Twitter too, but Hyperliquid obviously is like the talk of the town this entire cycle. Great exchange, great product. I was like, what are the chances Hyperliquid has better security than ByBit? Top 2, top 3 exchange by derivatives volume in the entire world. Huge company, hundreds, if not 1,000+ employees. I'd have to imagine. Hyperliquid's ran by what, five people, 10 people? Like I really couldn't tell you, but it's nowhere near ByBit size. And I was like, what are the chances ByBit? Again, what are the chances Hyperliquid has is strongest security as ByBit? And somebody tweeted a reply guide to me. He was like, well, at least Hyperliquid is decentralized. It's like, is it though? Is it actually more decentralized than ByBit? ByBit probably has 10+ senior officials that control the multi-sigs to unlock $1.4 billion in assets for their cold wall. Clearly that failed. Whatever their security practices, it failed. Do we think that Hyperliquid's 204 multi-sig or whatever it is, it has to be, it's almost definitely less secure than ByBit. I do have some funds on Hyperliquid currently. I am not withdrawing them because I trust in Jeff, the god, but you never know at this point. So I do think that it will be interesting to see, I think, how the market reacts to Hyperliquid. Are people going to actually flock to it because it is decentralized? Or is it actually going to create a scare and say actually it has a larger attack surface than a centralized exchange?
I think it's a fair take. I think there's a lot of ways that you could take this viewpoint. There are still a lot of risks when it comes to bridges, various, like if it's chains that you think or say are decentralized, like if you have your funds within protocols or in certain assets, like, I mean, you have to be realistic with yourself about like what are the actual capabilities of, either the managers or like the people that run those things. Are the contracts upgradable? Can things be changed without your knowing, despite you having self custody of things on some decentralized network? It's not always as clear cut as like I can always have access to these funds and withdraw them or swap them out. It really isn't the case in all cases. I will say I think Bach is going to have you at the throat a little bit for talking about his hype in this way, but it's a fair criticism for probably a lot of the like stacks, chains, assets, and infrastructure that just exists out there generally. And we don't have to turn this whole pod into a ByBit hack one, but it also does look like you said, Dan, they have been very upfront about covering like what's going on. The ByBit CEO is currently live right now, talking about this as well, about the incident. So at the very least, they're being very upfront with information. I would say it feels very different from the FTX situation, where the messaging was very much like everything is fine while it wasn't. And in this case, it's like, no, like we did get hacked there. Here's the thing. Here's as far as we know today. And we'll see what we can do going forward. But I think we can move on. Those were good points. The reason we kind of gathered the Blockworks cabal today was actually to talk about airdrops, token mechanisms, things like that. The other big piece of news, sort of fresh in people's minds, is the Kaito airdrop. Just recently came out. A bunch of CT yappers got a bunch of free money for basically just doing what they already do, tweeting and talking about crap shit posting online every day. And that's great for them. There's a little bit of back and forth in terms of like, I think people had very high expectations of how large this drop would be, and they were maybe disappointed in the actual realized value of those drops, even though it was still a significant sum for some of the largest like CT creators out there. 6 figs plus for large creators. The question that it has sort of spawned is, and there's sort of two sides to this, is do airdrops like make sense actually? I think people are questioning this in terms of like just giving away all of that assumed equity, if we want to call it that, to people who essentially haven't really done anything, right? If you went on Twitter and you connected your account to Kaito Apps, you got paid money for doing what you were already going to do. And there's some back and forth on whether this actually makes sense or not. I think people debate airdrops all the time, generally, like, oh, that was too much, oh, that was too little, like what a waste. I'm curious, like just opening this up, guys, do we have any like strong general thoughts on like, does it make sense that Kaito did an airdrop? Does it make sense that other protocols like give airdrops to early users? Why yes, why no? Let's get into it.
I feel pretty strongly that airdrops let it take a step back. I got into this industry because I think that there's an opportunity to typically in traditional businesses, there's two different types of stakeholders. There's like investors, and then there's like users, or stakeholders that actually have put capital up front, and it's like, let's use a product or a service. And those usually aren't aligned. And those two types of individuals usually have different goals, or they are whatever. They have different like outcomes that they want to see when they use a product or service. One wants to make money, one wants to just use a good service. I think that one of the reasons why I got into the industry was actually to align those two stakeholders. I want like user-owned protocols, user-owned businesses. And I do think like ultimately you do want to give ownership rights over these protocols. I do think it creates like more sustainable businesses in the long term. I think I have a problem with like the amount of size that people are airdropping to their early adopters, and not necessarily like the fact of airdropping itself.
Dude who hates free money.
No, and that's the thing. Like Kaito, I got a decent airdrop. Everyone that did anything over the past 8 weeks of tweeting, like got between a Toyota Camry and like a Porsche Macan, or upwards of like a, base level Lamborghini. It's crazy, and it was for 8 weeks of tweeting. Like that is, I don't know how to explain that to my wife. Regardless if it makes sense or not, like I think that it's not good for Kaito the business, or Kaito the protocol, to airdrop that much money, 10% of supply, to people that did nothing but tweet or even bought an NFT. What they probably should have done is give like 1% or something, give a very, very small portion just to like incentivize them a little bit to continue using, and say thanks for, being an early user, and growing our mindshare as a platform. And then either continuously stream portions of the airdrop over years, or give people the option to buy at a discount. And obviously there's a whole regulatory reason why that probably isn't allowed, especially in the United States today, which I'm sure we'll get into. But I think airdrops as we know them today need to significantly change in order to create more sustainable businesses for this industry moving forward.
Yeah, I completely strongly agree with everything you just said. I mean, as a power user of these protocols, like more airdrops the better for me. But if I look at it through the lens of the protocols themselves, like these teams, it's pretty clear that we need sort of a reframing on how we think about airdrops entirely. Like, basically, this comes from sort of the history of airdrops and why they exist. Like at first, it was basically this regulatory arbitrage, this like give community ownership, like we're actually owned by like community around the world, distributed, etc., and a lot of these things. And so like that's where I think the idea of airdropping a significant percentage to the community came from. And I think this kind of does still make sense in some particular cases. If you're, let's say, launching an L1 and you're trying to be money and you're trying to have like a strong Gini coefficient, like maybe it might make sense to have like a solid community percentage ownership at TGE. But I think for a majority of these protocols, it doesn't make sense. And like if you just look at it from first principles and do the math, like let's say you have $1 billion FTV and you're airdropping 10%, that's $100 million you're just giving out, right? And so you want to make sure you're getting at least $100 million in future value via those tokens. And so I think there's going to be a reframing from like these things as airdrops and more like incentive programs. And I think you've seen this progression over time where, it started as airdrops, just like general airdrops, like retrospective based on like certain activity on the chain, but then that migrated to point systems where you could actually specifically target certain types of activity. I think there's a problem with the points program in that, like as Danny alluded to earlier, there's like certain expectations that get created as a result of points. And like one of the things that I think is a problem with the current airdrop meta and points is the mismatch between expectations and reality. And that's typically what creates negative sentiment, is when like there's super high expectations and reality does not meet those expectations, whether or not the team like made any indication. It could just be market preferences or just the fact that crypto participants love to dream and like love to like think that they're getting the like hyperliquid type airdrop this time.
I mean, great evidence of that is every Kaito airdrop, spreadsheet that was circulating around. The lowest price was higher than the actual per app value, right? So that, to your point about dreaming, I mean, I completely agree with that. And this one was especially hilarious to me because all you had to do is tweet. Most people didn't even change the style. Okay, I probably won't say most people, but a lot of people like didn't really change the style or frequency of their tweeting. And
I disagree.
okay, maybe that's a stretch. But nonetheless, like you literally just had to tweet. Like there was zero capital at risk. Even if you did change your style of tweeting, what'd you spend? 30 minutes a day tweeting? Like, I don't know. And so to do that little effort and then receive an airdrop and then do the typical like, wah, I didn't get enough, I'm pissed. I don't know. This one especially was bothersome to me. You always see that, again, to your point about dreaming, like when you set a high bar and reality punches you in the mouth, you're going to be pissed. That's just like human nature. But I don't know. I think airdrops are cool and I think they're useful, right? If you think about like modern Web 2 businesses or just businesses full stop, like how do you incentivize activity? Well, you go out, you solicit your equity for your idea, you raise cash, and then you like use that cash to either subsidize your users or like pay them directly in some cases, right? Like Uber's shout out Monet Supply for these two great examples. But Uber in the early days, right? You could get across college campus for like $3, or you could get across Manhattan for like $5, right? And that was not. Uber was losing money. They had to pay the driver more. And post COVID, I think they had to hit the shell shock button there. And now it costs like $18 to go get tacos at this point. And that's the reality of what the rides actually cost. Right. And so that you kind of saw it there, like YouTube with free ads, the same thing, right? They just weren't monetizing you. And then you got addicted to the product and everybody posted stuff there. And now every 30 seconds you get a new ad. So I think those are like two kind of like real world examples there. And crypto kind of gives you the edge to do that with this token. Now, if the token is like pseudo equity, it's pretty interesting because you're just cutting out the VC, and that's kind of one of the core ethos is cutting out the middleman of crypto, right? You don't have to go raise the cash when you can just give them the token, which is pretty cool. But I tweeted about this yesterday, and this really like, I don't know, every time you get an airdrop, it's like you try to go explain it to your friends that like don't do crypto, just normal average people. And you explain, all right, yeah, like, so I was an early power user and this business wanted to reward me for my loyalty and like the effort that I put in to using this application. Like, okay, like, yeah, that makes sense. Like, so you got a reward though, like for just being a customer. I'm like, yeah, it's crazy. But I was really, really early. So, like I was one of the first 100 people using it. And they're like, oh, cool. Like, what'd you get? Like, oh, and then you tell them a number and they're like, what the fuck? Because it doesn't make any sense, right? It doesn't make any sense. Like in Web 2, you get $100 for being a crazy power user, right? And in crypto,
imagine Web 2, a product with 100 users was able to give $100 million back to its users.
It's completely unheard of. It's completely unheard of.
Impossible. They don't have the money because we create magic internet coins.
And so it's definitely cool. Like as a power user of the industries, I'm not complaining about me personally, but when I think about it from the shoes of this business that just gave me all this money, and candidly, if you look at the history of airdrops, you should sell your airdrops immediately when you receive them. I don't know. It's like, how is this model going to change? And I feel like long-term incentives are the clear answer there, but like we said that 3 years ago, and we're in 2025, and like Hype and Kaito were two massive airdrops this year.
Yeah, I think I don't have like I wish I had the perfect solution to solve this for the industry, and maybe one day Blockworks Advisory will, but I would like to see some kind of combination of a points program, and then you can convert those points to create a deeper discount on what you can do to buy into the protocol. So if I have 1,000 points, I get a 10% discount compared to what the private markets are going to get, or maybe it's going to get TGE at. If I have 1 million points, I get a 70% discount. And obviously points are going to be based on driving after specific actions that you want your power users to do. To be something that makes sense. And then maybe you do like a 1% airdrop. If they give it 1%, again, people would be upset because of what the industry has been ingrained to think airdrop should be. But my wife, for like a normal user, if we want to onboard the next billion users or the first billion users on chain, like they aren't going to expect a hyper liquid size airdrop. nor should they, because that is not normal. And I think we just need to think everyone just playing the same playbook that like Uniswap did 4-5 years ago. And kudos to them for doing that. Again, it has changed a lot of people's lives in general, but it's not good. It's not a net good for the industry that we keep doing this.
I don't think it's not a net good.
It's a net good for me and you and all of us on this call, on this pod, but like, and many people listening, but I don't think it's not sustainable is what I'm really trying to drive at. And if we're trying to create sustainable businesses, like this ain't it.
Uniswap airdrop was 5 years ago, and we're still doing it. Uniswap's still around. They're still launching new products.
Yeah, you're right. The labs entity's killing it.
Well, we mentioned the reg arb, right? The reg arb still exists. Like nothing fundamentally has changed from 2021. I think it's still entirely up in the air as to whether like a utility token is like something that is actually legally allowed from like US securities laws perspective. And some are doing that on chain today. Many are like LARPing as utility tokens. They're, it might actually just be a meme and like people just speculate on the narrative or like what the category is doing. I'm curious on your guys' thoughts because I was having a little conversation on this on Twitter the other day as well around this idea that just like what is the reason for teams not to keep doing this when like that regulatory uncertainty still exists today? They can raise private rounds based on whatever they're building, and then at some point, if they can no longer like do an up round in private, they can launch a token and that can serve as a raise as well, and they can capture some portion of basically fundraising money and like via vesting from the token itself too. You could argue about like whether giving away more or less of the token, like that's a cost to them, but Kaito objectively, like they're getting a ton of mind share from just running this program at all. And if they didn't do Yaps, then like we would be talking about it much less.
The apps thing is super interesting. I want to get into what the evolution of that will be in a minute, but I don't know. Like, okay, I think I could also make a better argument for a Hyperliquid-esque protocol to do a huge airdrop, right? Because perps are trading, and like let's loosely tie that to gambling, right? If you're trading anything on leverage, it's like basically gambling, right? A 50x position, that's gambling. And so if you are a casino, you absolutely want rich users. If you are a base layer, that matters a lot to you as well, right? You want a wealth effect. We've seen that time and time again matter a lot in this industry. So I could like really see good arguments for like, okay, like, yeah, you're probably not going to get that dollar in, dollar out return in any near time, but like it's going to be useful for you. So like let it rip. Whereas something like Kaito, like I don't think they need rich users. I think the Yaps leaderboard is kind of like exactly the tool that they needed to build, right? And now they have this, like every crypto CMO loves that tool. It tells them exactly who they need to, like it's the KOL list. And that's like they talk to those people, they can like drive the outcome that they want on social media. So I think they kind of did achieve that. And then I think that the way the token will play a role here is also pretty interesting. If it's this like pseudo equity thing, then again, I think the airdrop is harder to rationalize. But if it's a community token, right, like a meme coin attached to a business, like jelly, but actually a thing, then yeah, like okay, it should have been like quadruple the airdrop, right? And it's pretty unclear to me like which side of that spectrum the Kaito token is going to fall on. I was really hoping to get more from the team around like what the token is, what it will be used for. Like we know it'll be used for like governance voting and things of that nature. And it also, they called it a medium of exchange, which is fascinating. And again, I think that they're trying to monetize this leaderboard. And right, like there's this there's the Kaito Connect thing where like you're playing this game of getting the Yap voters to vote for your protocol, and it's almost like this. Convex was built on top of Curve to be this like bribery system to get VE Curve voters to do some intended action. And I don't know and then you saw Aerodrome and the other meta dexes. I think Solidly was the first one to do this. They saw the Curve and Convex relationship and said, well, why are those two separate protocols? Let's put those together. And then, like that model is working quite well. Aerodrome's had a ton of success on Base of internalizing that bribery engine. And so like it would make sense for Kaito to do the same thing. They have like the VE staking thing. And I think that seems different to me. But there's a protocol called like Tunnel that is kind of doing this already for the app Kaito Connect thing. So I don't know. I think it can go a lot of different ways on how the token gets kind of evolves from here. And it'll be extremely interesting. Like, I'm pretty excited about what they're doing. The token's been trading pretty positively in between like 1.2 and 1.8 billion, which is massive. So like, so far everything's been a success, I have to say.
You know, it's a bear market when Dan's talking about BE tokenomics again. I haven't heard him mention Curve, Convex, and all of those in a minute. Early 0x Research podcast listeners probably remember that.
The glory days.
Yeah.
Yeah, I definitely want to touch on the like sustainability of these airdrops. I'm actually not arguing that it's like not sustainable if you give out a big airdrop. I'm a believer that the markets are like somewhat efficient, and markets are going to price the protocol effectively, regardless of like whether it's some random participant selling the token or it's the team selling the token. Like, the market's going to find the valuation. I just think these teams, like, you're just not optimizing the resources you have available, and you're likely missing out on market share and growth because you're giving away these resources. So that's my take. And then there's also the thing you touched on, Dan, of like this like equity and token structure where there's two different things, and it depends entirely how you structure the token, whether it actually does have value or it's like this meme coin. And I think right now, going back to like the market always having these high expectations, I like to think of like when you have token and equity now as Schrodinger's cash flows, where everyone believes the cash flows are going to both the token and the equity at the same time. But I think over time, again, with like efficient markets, like the market's going to figure out whether the token has any actual value or not. Um, and and to me, yeah, the only way token can have value is if it has some sort of cash flow or unique like tokenomics, like the vote escrow type model, where there's some economics going on specific to the token that in which like participants in the network or the products like benefit financially through that mechanism. And I think there's a lot to explore here. Like, if you are doing this like this Kaito type, like you're a company that launches a token, I'm curious to see how like tokenomics in that world evolves over time.
Have you been getting silly on chain this year, farming on 10 plus wallets across different ecosystems? Well, Crypto Tax Calculator is here to help. Crypto Tax Calculator has 3,000 plus integrations to support all of your wallets, exchange accounts, and on-chain activity, and a custom pricing oracle to handle even the most chaotic portfolios. Get started today and make tax season easy. You can use our exclusive discount code BW2025 to enjoy 30% off all paid CTC plans until April 15th of this year. Follow the link in the show notes below to get started. I want to share something because it's so relevant to what Westy just said here, but like I said, I was having a bit of an argument the other day on Twitter, and I used this exact analogy in discussing tokens and calling them like a Schrodinger's cat, in the term that they're both utility and memes at the same time. This like regulatory arb that exists is what allows that to stay. But if we had clear regulations on if the cash flows, for example, could be legally passed back to token holders, then that kind of forces that to collapse. And it's you get to make a decision on like, if they can do it, then then you do have these like actual legal utility tokens. And if you can't do it, then they are actually all memes. So I love that you brought up that point, Westy. I think that's like exactly the state that we're in. And it plays into the fact that like everything in crypto gets like speculated on to the max, and we see wild swings in valuations of everything. Kaito is a good example of just like people look at comps in the industry. It doesn't really necessarily matter if cash flows are going to go to the token today or not. We don't really care. We're going to look at like, what are the relevant comps? We discussed on a previous pod or just recently about Arkham being like maybe a relevant comp for Kaito. Like you said, the market acts like rationally within like the bounds of what is like normal today, and like this is just the norm. So it's not crazy to see this continue to happen again and again, because nothing has changed to allow like one outcome to prevail. We're not in the state yet where like US regulators, for example, are willing quite yet to say that like all utility tokens are a-okay, like go ahead and do it, drop a token, maybe even do an actual ICO and let people buy it. They're not at that stage yet. And so we're just going to continue to sit in this gray zone is where I'm feeling.
I think some referred to the gray zone as crime season just a few months ago. And kind of related to that, though, the SEC is pending a withdrawal against its suit against Coinbase. I don't know the exact specifics here. I just saw it right before we hopped on the pod, but that feels like a massive win as well, right? They've been basically attacking Coinbase for the last 3 to 5 years, and an official withdrawal is not a settlement. This isn't like Coinbase paying them off. This is the SEC saying, all right, we were wrong, we're done, and let's move on, which is huge. So it's also it's the issue with regulation, and that being a catalyst is governments move so damn slow. So yes, all these things are changing, but we're going to be saying that for the next 12 months. And the question is when do those things come into effect? In my mind,
yeah, and with positive regulatory catalysts like this, you're gonna see a shift in basically everything we've been talking about, like the fact that you need this regulatory arbitrage. Once we get more clarity, it's like that arbitrage goes away and rules become more defined, and the expectations of the market changes. And then there's also this piece of we've kind of touched on it, but it's okay, if airdrops aren't the perfect model, what is? ICOs to me seem like a way better model for a lot of reasons. One, it's just the participants, to me airdrops leak value in a certain way. In both scenarios, the token ends up with a willing buyer who's bullish on the product. But in the case of an airdrop, the cash that's being sold ends up in the hands of someone that just doesn't care about the protocol, just leaves. And also the person that's buying the token ends up with the worst price versus an ICO, where it's the protocol that ends up with the cash that they can then invest in growth. And the person that's buying gets at a great valuation. And then there's also this this sentiment piece of I mentioned earlier, this mismatch between expectations and reality. With ICOs, it's very clear what reality is. There's no possible way in which expectations can get out of their skis, because it's this is the valuation you're getting it at. What you expect it to grow to is on you, but there's no it's very clear. And then again, with buying at a good price, another key to sentiment is allowing your community to be rich, but getting price discovery for people is super important, especially when this whole year people have been screaming about VC coins launching at crazy FTVs, and the only way retail can get a piece is on the public markets after they're marked up 100x from the private sale. So to me, ICOs solve so many problems with the current landscape in terms of airdrops and the way tokens are launched in general.
That's actually one of the core reasons why I became initially very interested in crypto, is I thought that these rails could serve as, this decentralized method of fundraising, and, provide access to markets that otherwise, individuals could not have access to. I quickly learned that was not going to be the case for US residents in most scenarios, unless you're willing to fake your identity. But either way, I think we've kind of seen this argument play out. And what I do actually find interesting is that it's still very common to hear this idea that ICOs are a worse model. I'm curious, let's dive deeper into that. What are your guys' thoughts? But every time people go down this rabbit hole of well, we used to do ICOs, and now everything is just memes, and you have to wait until things hit the public market, like you said, and they're at an insane FTV, nobody wants to buy them, and then we have to sit around and let the market wait for the price to become reasonable for willing buyers while tokens unlock and they get dumped onto the market.
I think you said an important word there with the word wait, right? ICOs are early stage venture bets, but it's very felt, right? Those take time to develop. Whereas a lot of these other things, you just immediate. The product, think about, okay, so Kaito, I think, is 3 years old, maybe 2. And then the airdrop token goes live. The product's already there. You can feel it, you can interact with it, you can do things with it. Versus an ICO is think back to the ICO era, right? That was tokens with white papers, right? There was nothing there other than this one PDF. So I think that was actually one of these weird things now. And you can think about human just more broadly, at least in the US specifically, right? Everybody's super addicted to their phones now, and attention spans have gone to total shit. So I think that actually plays a pretty serious role into why things like the pump fund meme era has been so popular with people on chain, is because you get these like repeated dopamine hits of like up, down, up, down, up, down. And I think that's like this weird reality of like, that's why I call it a game, right? Because it is a game. You're literally playing a game versus a true investment into an ICO for like an actual company and an actual product is like democratizing early stage venture bets. And that's completely different than some of the other things that we've been seeing over the last bit in my mind.
What's the difference between ICOs and pump fund?
I mean, not a ton, other than the fact that it's what's behind the token, right? Like the intent of an ICO is that it should be a real product, whereas like pump fund is inherently supposed to be a useless token.
Yeah, there's also a difference in the mechanism that I think is pretty interesting. It's with ICOs, the protocol sets the price versus like in a pump fund, let's say like a new protocol like bundles like a bunch of the supply for themselves, and they're selling off a bunch that like would be for an ICO. They're selling it in the open market depending on what like the current price is in that liquid market. So it allows basically the liquid market to price. But like obviously like there's probably inefficiencies with that of like people front running the selling, and like there's not that much liquidity when things like exit off pump fund. So there's obviously issues, but I do think it's like an interesting take on the ICO model.
I think pump fund is an awful way to launch a real product token. Horrible.
I would agree. I think the mechanics just don't make sense. Pump fund is a great way to trade attention and trends, right? You're literally seeing things get priced in real time based on how many people care or think like it's going to go up because it'll get attention. But for an ICO, that doesn't really make sense, right? The goal should be to like probably to raise funds at like some relatively agreed upon, current rough market price for what your thing or idea is. And that doesn't happen on pump fund. The mechanics don't really support it.
You know who thinks a lot about this? I feel like I've said this so many times over the last like 3 weeks that you'd think this dude is like paying me under the table to keep talking about his thing, but not at all. Is Austin Adams. He was like a Uniswap researcher for quite some time, and then he founded Whetstone, and they're building pure markets on Unichain. And basically the idea, TLDR, is like to build a better environment for launching real tokens. I say like real meaning like project tokens. And like they're trying to solve a lot of the inefficiencies for a team trying to do that today, right? And again, he walks through much more intelligently the shortcomings of why pump fund is not great for launching a real project token today. And he has 2 podcasts that he recently did on Bell Curve. I 100% recommend you check those out. One's with Jesse Walden, and then one is just more of like a roundup style that he was in on. Both are great. Both are really great. I think it really sets the scene for how these things are going to change. And after listening to those, I immediately tweeted something to the effect of like, if anyone's going to like rip the meme coin ball out of Solana's hands right now, it feels like it can be Unichain because of what V4 hooks enables and people like Austin are building today. Now, I think there's like a pretty good argument to be made that pump fund is the most efficient and beautiful, simplistic design for launching these like attention style meme coins. And the reason being, it's like quick hitter, and like, yes, that is absolutely increases the number of scams you're going to encounter. But like to the players of this weird game like that, they understand that for the most part. So it's weird. I mean, like I said it on the Lightspeed episode, I'm not bearish the total number of pump fund coins over the next like 30 to 60 days. Like the people that were participating here already knew the Libras of the world existed. So I don't know. It's going to be weird to see.
I guess the tough part to really tackle is that this sort of like regulatory uncertainty still impacts this potential for something like an ICO revival, right? You might, at least within like for US users, for the non-accredited, US investors out there, historically, like strong projects that do raises, like you're not going to be able to get a seat at the table there unless you fall into this category. And that probably stays the same until kind of the regulatory uncertainty clears up. If it ever does, it may never clear up in a positive direction for like non-accredited investors. Maybe you think that's right or wrong, but I don't think that that part of the model can necessarily change. Now, you might be able to open up the access to this, back to people from other countries or other areas of the world, and maybe that's totally fine, and their front ends will allow that. But at least within the U.S., this is going to be a lingering problem, I feel, or at least a lingering sort of battle that we'll be going back and forth on until some change comes.
I think it's going to happen sooner than a lot of people expect. I think you're going to see changes to accredited investor laws. I think you're going to see centralized exchange, regulated ICOs. And by regulated, I mean like they just do KYC, KYB kind of thing. Yeah, I don't want to say that the administration's a paradigm shift, but I actually do think it will be. And I think it's actually going to happen within 12 months. Trump and like that admin has, first of all, they put very interesting people that are very progressively like crypto forward. And two, I think Trump and that admin's going to try to really make a mark in their 4 years. And I think they're going to try to do it sooner than later. I don't think it's going to be something he waits 4 years to do. I think it's going to be something he doesn't wait to do. It's going to happen soon, is my bet. Maybe not this year, but I'd be surprised if we don't see strong movement on this front in 2026.
Yeah, I guess the signal for that, I mean, Dan, you mentioned, I believe, the Coinbase SEC lawsuit getting dismissed. Like, that is a good indicator, at least, of the shifting kind of regulatory viewpoint, at the very least. I think generally speaking, we went from an environment of like the SEC not being willing to concede that anything is like most likely not a security. They were kind of, it was sort of like well, which ones do you think are securities? And then you kind of have to like guess or be like, well, we think in good faith that these are probably the best ones. And then they come back and say, well, actually you're wrong because of XYZ reasons that are unclear. That seems to be clearing up at the very least. I guess we'll see going forward. Like David, you gave your thoughts there. I mean, how do you guys feel, Westy, Dan? I mean, we're seeing some movement on things, but I'm curious, like, do you feel that, like, generally I would expect that these are longer term things that we would have to see materialize, right? We'd have to see legislation come through, the come through Congress. We'd expect that maybe the SEC or other like executive agencies might need to take some time and like survey the landscape a little bit to understand what even like meaningful, rules and regulations should even look like in the first place.
I think it'll be like waves, right? If you're going to get like centralized exchange regulated ICOs or something like actually groundbreaking like that, it's going to have to go through the long, boring process. But there'll be smaller things in between, today and that, right? Something as simple as like conferences coming back to the US, shout out Blockworks DAS. Like those will bring the protocols back into the space who are willing to spend money on advertising and like participate in the US side of the crypto world. So it'll be in like developers moving back to the US or founding companies within the US. So you'll see like that trend start to shift as people are become more and more willing to just like take the bet that these things will change over time. But I don't know if you're not going to, like, I don't know how visible those things will be over the next 12 months, right? Like the benefits of those take longer to come to fruition. And then again, like to get those groundbreaking changes, whatever they may be, whether it's accredited investor laws and then like Echo opens up to everybody, or if it's again, like something interesting with how tokens launch through centralized exchanges in this like very permissioned, but government approved way could also be interesting and something I wouldn't be shocked to see at all. And that'll take longer for sure.
Yeah, it's gonna take some time. I think crypto participants are so used to like things moving fast because that's just the nature of our industry. But the government does not move that fast. And yeah, I mean, Dan basically hit the nail on the head. I think pretty soon you do get some like foundational, like good regulation for the industry, like clear rules from the SEC, for instance, and some market structure stuff. Just like laying the ground rules and like allowing innovation and for teams to come back to the US and feel comfortable. But a lot of the more detailed stuff is gonna going to take some time, but it effectively is a new paradigm from a regulatory perspective. Like, we have everyone in this administration that we need to have to see positive change, and so I feel very confident we're going to get it. We just got to be a little patient on the time frames because we're so used to like stuff happening quick, but it will happen.
Remember about 2 weeks ago, there was news, or I don't know if it's real or not, rumors circulating about Pump Fund's potential token launch, and that they're supposedly working with centralized exchanges to create some type of like Dutch auction public offering model. Again, the team, Elon, shot it down saying it's not true. I actually think it probably is, putting my tinfoil hat on. But I actually think, especially Pump Fund trying to do what it's trying to do, which is like democratize access to launching tokens. And I do think that they know like they need to become a launch platform beyond just like attention meme coin economy. They could be the first one to like really try to do this in a big way, like a more regulated way, to do a barbell approach, right? Like they're meme coins, but then they're like, no, we're to launch the first like real regulated ICO.
That would be super ironic.
It would be, but usually the most interesting.
Yeah, there's a razor for this, right? The most insane outcome is always the outcome.
Yep.
If Pump Fund does the biggest airdrop ever, do you sell it day one?
I mean, if it's the biggest ever, you probably sell it just because like it would take a lot of buying pressure. If it's that big, like you probably do. But yeah, it entirely depends on like the market at the time, the percentage of tokens, what valuation it launches at. Yeah, depends.
A lot of parameters go into the decision, but if they airdrop me a Porsche, I'm jumping that. I'm sorry.
Yeah, I love like using airdrops in like car terms. That's my favorite.
Yeah, I feel like we need to talk about DeFi to cleanse ourselves from the meme coin and regulatory conversation this was. I don't know about you, but I've been using Morpho a lot. I don't own the token. I have no thoughts on the token. I've just honestly loved the product. Given the recent change in market conditions, I have more stables than I usually do, and seeing that balance just sit there is actually infuriating. Again, going back to the deterioration of the human attention span. So I was looking for places to farm them, and honestly, like I love the Morpho model here. I'm like kicking myself because people told me about Morpho like long before it entered its new era, and I just like ignored it at the time. Lending was just like super boring, and it was just like the bear market blues. Fast forward to today, and like the product is incredible. Big shout outs to Gauntlet and Steakhouse. I'm using both of their vaults, and they seem like it just seems like a great way to deposit stables. They do all the hard work for me, and like obviously there's risks associated with that. Do your own research, yada yada. But it's fascinating to see kind of how this has evolved. So they're on mainnet and base today. I'm using their base deployment, but it's been I've used more of this product over the last couple of weeks than I have anything else, which has been a pretty cool shift.
How can we use Solana?
Honestly, my stables are in my Coinbase wallet on base, and I'm too damn lazy to move them. I am sure you probably saw my admittedly aggressive complaints on Twitter about that stupid fucking bridge button on the Coinbase wallet app. Okay, so there's got great solutions to move things across chains today, and they have like a very slow and horrible UX and on that button. You're gonna get me riled up again. You click that button, and you just get like, okay, yeah, your transaction went through, cool, and then your funds are just gone as you're moving USDC across chains, and then 30 minutes later they just reappear. Okay, so like I was, I'm capable enough to like click into the transaction, see what it used, and be like, all right, like my funds are not just like vanished into nowheresville, but like didn't tell me that as a user, so I'm still pissed. And then B, like things like Bungee or dBridge are great ways to move funds across chains instantaneously by using like leveraging market makers on the back end. That button, the bridge button, should absolutely be using those solutions on the back end. Or use your own market makers, your Coinbase. Like you can figure this out. I don't care what you use. I just want it to be instant and I want it to be fast. And so after that fiasco, my funds were on base. They're staying on base. I'm not moving.
One thing I want to say really quick before Danny, sorry, Charlie. If Jesse, if you are watching this, I am big Coinbase bull, historically speaking, but I will say, using the Coinbase wallet extension and going to swap on that, it opens up a new tab on wallet.coinbase.com, I believe. Not the best UX. Please just let me swap in wallet. Don't open up another tab. Like, reduce the user friction flows, in my opinion.
I think there's a good irony here as well. Like Dan, you brought up Morpho, and then you brought up pain points with Coinbase products. They just recently did an integration where you can borrow USDC based on BTC collateral, and it just
I was looking for this button too. I don't have it yet, but I was
it
doing some
uses base
digging.
chain or it uses base just natively. Converts your Bitcoin to CBBTC, wraps it up, and then deposits it, and then withdraws USDC like all natively on base using Morpho. And then I don't know. I think you just bring up a great point that like you go to bridge or swap or do other things, and there's a lot of pain points there, and they haven't quite gotten to the same like seamless level of making use of the on-chain things that are available.
Yeah, 100% agree. It's still my favorite mobile app. I know Rabby has like a much better bridging button, so I think they certainly haven't beat there. But like, I don't know about you guys, but once I have like a wallet with funds on it, it takes a whole lot to rip me out of it. Like I was a MetaMask user for far too long, and then I switched like all my laptop has my like I don't use MetaMask anymore. I don't know. Yeah, it's just like the hot wallet management system is still a bit of a disaster in my mind.
I'll show
And
Phantom because it's the same experience now where I feel like people used to be, everything is in MetaMask. You do it all in MetaMask once it's on chain. And I feel like Phantom has been killing it with, they've got Sui, they've got Base, they've got obviously Solana. They're kind of becoming like that powerhouse. And it's like, I don't know, it's nice to use. It's sleek. It's easy. Maybe pay some front end swap fees if you use their swap feature, but you can just as easily like pull up Jupe or pull up whatever native thing in the Explorer. I feel like they're at that same stranglehold point where it's just easier to use, Phantom as like your solution for everything.
yeah, I feel like they're probably the market leader right now. But like, if you really pull it apart, like how much better is Phantom than MetaMask? It's not like a huge difference. They have a lot of better UX features, right? Like, dude, I was using I had like a test wallet on my PC that has like $5 in it, and I just use it for like test transactions when I'm doing data work and size check. And it's a MetaMask because again, it's just been there, and like I'm not fucking changing it. And like when you get a new coin still, it's like, hey, you got a new coin, like you should go add it. We're like, what? Just show me the coin. So there's really small things like that Phantom does infinitely better. Like for example, that like you buy a coin shows up in your wallet. Duh. That's what the user wants. But like none of them feel like this awesome product yet. And honestly, I think the Coinbase wallet's the closest piece to being that. Again, there's like some low hanging fruit in my mind of getting it closer, like that bridge button. But and I will continue campaigning on Twitter. I've now resorted to telling Bungie and telling DBridge, get implemented here. But it feels like the most complete product, right? And like I use Coinbase as my centralized exchange, so I can kind of like pair these two things together pretty cleanly. Yeah, I don't know. I'm definitely a fan of pairing the products together as well.
Love it. I think that's probably a good place to leave off. Maybe one more shout out in terms of news is there's been a bit of a crazy community CTO happening on the timeline for Aptos. We've had a Buzz Lightyear, Buzz Lamech account really just putting Aptos on his back, carrying them, carrying the chart, carrying everything really. And people love this guy. I'm sidelined and I hate it, but I have to like every one of his posts. The guy is just hilarious. It's surprising to me that maybe other teams haven't like gone this route, so to speak, in terms of marketing, because like engaging the community in this way is really effective, as we've seen. He's commenting on every large, CT account, and it's just absolutely hilarious.
Dude, he's been commenting for months on like so many posts, and it just took one. I think it was Fejao, like his post that went viral, and it was just so funny that everyone was on board. And he's had a bunch of like witty posts. He's going back to like 2022 posts of Kobe and like asking if he's sidelined. It's the best thing to happen to CT in a long time. Like every time I see a tweet of his, I crack up. So yeah, shout out to him.
We needed this.
We needed this.
This is what people stick around on CT for. Great app. Hopefully everyone isn't sidelined out there like I am. If you are,
0x Research looks good here.
yeah, maybe reconsider your positions. Otherwise, we'll see you guys next time. Appreciate y'all for coming on. We had
Join the Telegram.
the cabal.
We just talk shit in there. It's fun.
And join the Telegram cabal. Now that I'm mentioning the Blockworks cabal, because I think most of the Blockworks cabal is in the Telegram cabal. So hop in there. You can also talk to James Kristoff. Classic.
We gotta start charging this man for shout outs. I think I'm in love with him. I don't know why I keep talking about him.
I think what I would say, the equivalency I'd make before we close out is James Kristoff is probably the Buzz Lamech of the OX Research Telegram chat. So we'll leave it there.
Performance. He ties it together.
Don't stay sidelined. We'll see you guys next time.
Thanks for having us.